payout on hold? What Stripe reserves and risk holds mean and how to move past them. A held payout isn't a punishment. It's usually a temporary check. Here's how to understand it and get flowing again. You check your bank account expecting last week's sales to have landed, and instead there's a banner. Payout paused, or a portion of your balance is being held in reserve. Your stomach drops. Did you get flagged? Did a customer report you? Is the money gone? Take a breath, because in the overwhelming majority of cases, the answer is none of the above. Stripe reserves and risk holds are boring, mechanical risk management tools that trigger on patterns, not on personal judgment. They're annoying, they're sometimes confusing, and they can absolutely be resolved. This guide walks through why holds happen to completely legitimate creators, what the different flavors of hold actually mean, and the concrete steps that get funds released faster instead of slower. Why payment processors hold funds in the first place. Every card payment carries a small window of risk. The buyer can dispute it, claim it was fraudulent, or ask for a refund weeks after the money already left the processor's hands. Stripe, like every processor and every bank behind it, has to make sure it isn't holding an empty bag if a wave of disputes shows up. So it builds automated models that score transactions and accounts on dozens of signals: business age, transaction velocity, average ticket size, category of goods sold, dispute history, and more. When a signal crosses a threshold, the system doesn't ask a human to review your soul. It just applies a standard mitigation. Hold a slice of funds or pause a payout until enough time has passed to confirm the transactions are clean. It's the same logic that makes your own bank flag an unusual purchase on your card. Nothing personal, just pattern matching at scale. Reserve versus one-time hold. Know which one you're looking at. These two get lumped together, but they behave differently. And knowing which one you're dealing with changes how you should react. A pattern that trips more creators than anything else. A brand new store that suddenly does 5x its normal volume, say a launch day, a viral post, or a big affiliate push, is one of the single most common triggers for a hold. It's not that big launches are bad, it's that a sudden spike looks identical, from a risk model's point of view, to either fraud or an unsustainable business about to generate a wave of chargebacks. If you know a spike is coming, see the checklist below. The most common reasons a hold shows up. Your account is new and hasn't built up a track record of clean transactions yet. A sudden jump in sales volume or average order value relative to your normal pattern. A spike in refund or dispute rate. Even a small number of disputes matters more on a small account. Selling a product category that carries inherently higher risk in payment processor models, certain coaching, high ticket or subscription structures, incomplete or mismatched business verification details on the Stripe account itself, a customer complaint or a dispute where the buyer claims goods or services weren't received. What to actually do when you see a hold? The instinct is to panic email everyone you know or vent on social media. Skip that. The fastest path back to normal payouts is boring, methodical, and mostly happens inside your Stripe dashboard. Open Stripe's dashboard and read the exact hold notice. It usually states the reason category and whether action is required from you. If Stripe requests documentation, ID verification, business details, proof of delivery, submit it completely and promptly. Partial answers restart the clock. Check your dispute and refund rate for the last 30 to 60 days. If it's climbing, that's very likely a contributing factor. Make sure every recent order actually delivered on store.fan, digital products, course access, and meeting links deliver automatically the instant payment clears. So a real delivery failure is rare but worth ruling out. Reply to any customer emails or support tickets sitting unanswered. An unresolved buyer complaint is one of the fastest ways to keep a hold in place. If days pass with no update, contact Stripe support directly through your dashboard rather than guessing. and separately reach out to a ref support. Contact support if the hold seems tied to how your storefront or checkout is set up. Check your recent 30-day sales volume so you know what normal looks like. If you're expecting 3x plus your usual volume, consider a soft ramp. Tease it a few days early instead of one giant spike. Keep your Stripe business profile fully verified and up to date before the launch, not during it. Have your product descriptions and delivery process crystal clear so buyers aren't confused enough to dispute. Watch your inbox that week. Fast replies to buyer questions prevent disputes before they start. How this connects to the way store.fan is built. A meaningful share of holds trace back to buyer confusion rather than fraud. A customer pays, doesn't immediately see what they bought, and files a dispute out of frustration instead of reaching out. That's exactly the failure mode store.fan is built to close. When someone buys through your store.fan page, they get a secure download link on screen immediately and by email as backup. The same instant pattern applies to course access and meeting links. That immediacy matters more than it sounds. A buyer who sees their product land in their inbox in the same minute they paid has almost no reason to open a dispute. Clear checkout, instant delivery, and an accurate product description are the three biggest levers you control. And all three point the same direction: fewer disputes, cleaner account history, fewer holds. It also helps that you're never depending on a platform wallet that itself could be a choke point. Whether you connect Stripe or add a PayPal email, money goes straight into your own account. Apple Pay and Google Pay just work on top of whichever you connect. If you haven't set that up yet, or you're comparing what a paid plan actually unlocks, the pricing page lays out the plans plainly. And every paid plan runs at 0% platform fees, so a hold on the processor side is the only friction point you're managing, not two layers of it. The single biggest mistake creators make during a hold is going quiet. Answer every request Stripe sends, answer every buyer email, and the hold almost always clears faster than the anxiety suggests it will, building an account history that rarely gets flagged again. Once you're through a hold, the goal shifts to making it a one-time event rather than a recurring headache. Consistency is the underrated variable here. Processors trust patterns they've seen before. A store that sells steadily, keeps disputes near zero, and grows in gradual steps builds exactly the kind of history that lets future launches, even big ones, sail through without a second look. If you want to see what a mature, steadily run storefront looks like end to end, a live example store is worth a look. From cover photo to checkout to how products are described up front, so buyers know precisely what they're getting before they pay. Quick gut check. If your dispute rate has been under roughly 1% and your growth has been steady rather than a single giant spike, a hold you hit is very likely a one-off verification step, not the start of a pattern. Respond to it, keep operating normally, and it typically clears on its own timeline. The bottom line. A held payout feels like a 5-alarm emergency the first time it happens, and like a minor Tuesday inconvenience the 5th time. Because by then you know the drill. Read the notice, answer completely, keep delivering fast, keep replying to buyers. None of that requires a lawyer or a crisis plan. It requires patience and a couple of dashboard clicks. If you're still deciding where to build your storefront, or you're rebuilding after a rocky payment experience elsewhere, instant automatic delivery and a straight-to-your-account payment setup are two of the clearest ways to keep your dispute rate low and your payouts predictable from day one. Explore more guides on running a healthier storefront, and when you're ready, it takes minutes to set up. Key takeaways. A payout hold is almost always automated risk scoring, not a manual accusation. It's checking a pattern. Not you personally. New accounts, sudden volume spikes, and a jump in average order value are the three most common triggers. Reserves, a percentage held back on a rolling basis, and one-time holds, a specific payout paused, are different things with different resolutions. Fast, complete responses to Stripe's information requests shrink hold duration dramatically. Silence is what makes holds drag on consistent delivery. Clear product descriptions and a stable sales pattern are the best long-term defense against holds recurring. Start your creator store free at store.fan.